Welcome back to Power Lunch. The Dow is well off the session lows, down only 43 points right now, and the VIX index is off of its highs. S&P, for its part, down 0.6, NASDAQ 1.2%. Let's dive into some stocks, try to make sense of this uncertainty for what it means for investors in the U.S. Aadil Zaman is here. He's a partner at the Wall Street Alliance, and it's great to see you again. A big picture, does today, people are talking about maybe on the margin a little bit more inflationary pressure in the economy. Even we just heard in that port strike discussion, does it possibly even keep the Fed from doing further rate cuts? Are you concerned about anything like that?
I don't think so. I think that short term it could definitely cause a correction, and we feel that investors at this point in time should be hedging their portfolio and have exposure to gold and to energy as a hedge. And also, we spoke last time I was on the show, we spoke about the concentration risk in the market. So investors should increase the breadth in their portfolio. Long term, we feel the market is still headed higher.
I think it's interesting as well, because when we talk about this notion of the overall economy, it's also one where geopolitics figures into the Fed. We know this. But given what you've seen so far today, how frightened or how much importance should the Fed put on the Middle East conflicts in particular for its economic outlook in the coming, say, 6 to 12 months?
Yeah, so I think the Fed told us that they're going to be watching this very closely. That's what we got from what Powell's comments are, and they're going to be accommodative as needed. I think that the Fed, basically their goal right now is we are in a sort of a sweet spot. So they want to freeze things the way that they are. So I think the Fed is going to come in and they're going to accommodate as needed, and they're going to keep a very close eye on these developments.
Let's talk some of the specific stocks that you like. That's a huge part, sort of the debate right now. Home Depot, Caterpillar. Walk me through names that you think are especially areas that people can kind of find some alpha and it just might be well positioned for everything that's going on in the world.
Sure. I think that, with the recent accommodation by the Fed, I think one of the things that we are going to see is that major economic collapse is off the table, right? So the affluent customers, they continue with their spending unless minor economic blips don't really impact them. So on the high-end businesses that are catering to the high-end consumers, for example, American Express, which charges a higher fee as well as a higher exchange rate, they will continue to benefit. I think with Home Depot, we tend to like that because of the housing play. We got a glimpse from Restoration Hardware as to how those type of companies would respond to the rate cuts. I think Home Depot is another great one, and it also pays a great dividend, which is a big theme for us.
We talk about, at least we reported this last hour, about the number of defense stocks that are either making new record highs or at least one-year highs or beyond. We mentioned names like RTX. We mentioned names like Northrop Grumman, Lockheed Martin. Would you chase some of these defense gains into what you've seen today? And if so, is there a role for defense in your portfolio? And if so, which ones do you like?
So we definitely think that you must have exposure to the defense names in the portfolio because given the geopolitical tensions, whether the Democrats win or whether the Republicans win, there is going to be continued increase in defense spending. So having defense stocks in the portfolio is very important. We like Lockheed Martin. We also feel that for the same reason, for the geopolitical tensions, having gold in the portfolio makes a lot of sense. So we have SPDR Gold ETF GLD for our clients. That has done really well. We think it continues to do well because of this volatility. Plus, with rate cuts, dollar becomes weaker, gold becomes stronger. And having oil in the portfolio as a hedge makes a lot of sense also, right? Because if you look at a company like ExxonMobil, it's trading at relatively low valuations. The break-even on oil for them is very low, and it pays a very good dividend. So these are the type of stocks that we would have in the portfolio to provide it more of a balance and a hedge.